This is Morgan here from Fletcher Trading. Today I'm going to be showing you how to do a simple backtest of a forex trading strategy. I'm going to be using the Elder algorithm system as an example, and I'm going to be backtesting the US dollar CAD on the 15-minute chart. I'll be briefly explaining how the strategy works, but if you want to see that in more detail, then I'll leave a link in the description where you can find the ebook. This will describe exactly how the strategy works, and you can download this for free. So let's jump into the video. So I'm just going to start by explaining how the strategy works. So we first want to go to the 4-hour chart. On the 4-hour chart, I've got the trend trader indicator, and we're just going to use this to analyze the trend. If it's red, then we're in a downtrend, and we're only going to be looking for sell positions. And if it's blue, then we're in an uptrend, and we're only going to be looking for buy positions. After establishing that, we'll drop back down to the 15-minute chart. So right now, we're currently in a downtrend, so we're only going to be looking for sell positions. And we've been in this downtrend since around the 16th of November. So we just scroll back now. We've got two other indicators on the 15-minute chart. We've got the daily pivot points, which is just a form of support and resistance. And then we've got the Elder algorithm itself. This is just going to give us our entries on the 5 and 15-minute time frames. So I'm going to start by analysing the last month of trades here. So I'm just going to scroll back to the start of November. So here's the 2nd of November. So our first trade is going to come in here on the 3rd. Once we've got our chart set up, we just want to open up an Excel spreadsheet to track all the trades. In my Excel spreadsheet, I just like to have a percentage here. I'll put a 1 if it's a winning trade, and I'll put a 0 if it's a losing trade. At the bottom here, it's just going to add that up and divide it by the number of trades, and this will just give us our percentage accuracy of the strategy itself. If it's a winning trade, I'll place it under the take profit, and if it's a losing trade, I'll place it here in this column. Here, this is just going to get added up here, and this will give us our risk to reward, our total pips, and the accuracy itself of the strategy. I'll leave a link in the description where you can download this spreadsheet so you can track your trades just as I am. So if you've only got one screen, I'd recommend just minimizing it like this and having it so you have half your chart here, and then the other half of your screen is just going to be your Excel spreadsheet. So our first trade comes in here in November the 3rd. So after we get our signal from the Elder algorithm, I'm just going to wait for the stochastic oscillator to pass back below 80, which is just going to confirm our entry. So we'll enter this position somewhere around here, set our stop loss around 35 pips, and we're going to target the support level using the daily pivot points or a recent low. This is obviously a winning trade, so we're going to write this win down as something around 55 pips. We'll just place a 1 here and a 55 in the take profit. And we move on to the second trade here. If we were to enter this trade, we'd wait for the stochastic oscillator to pass back below 80, which would be somewhere around here. And if we were to enter this trade, we'd be targeting these recent lows around 75 pips, and we could place our stop loss just above this resistance level using the daily pivot points. This would be a losing trade and would lose around 35 pips. So we're just going to place a 0 here, and we're going to place a 35 here. So moving on to the third trade, again we're in a downtrend, so we're only going to be looking for sell positions. We would enter this position somewhere around here after waiting for the stochastic oscillator to pass back below 80. We're going to target either the recent lows, or we're going to target a support level. If we were to target the support level, we'd have around 100 pips profit, and we'd place our stop loss somewhere around a recent high, so we'd have a 46 pip stop loss here. This would be a winning trade, so we want to place a 1 there, and then we just want to place a 100 pip win. So if we were to enter this position here, although it's a good sell position in a downtrend, we would only enter after it's passed back below 80, so we'd enter somewhere around here. If we were looking to place our stop loss, we'd look for a recent high. There isn't a recent high, nor is there a daily pivot points close. So we'd just look for around a 35 pip stop loss, and would target the recent lows for around 35 pips for a 1-to-1 risk reward. This would be a winning position, as would be taken out somewhere out here for around 35 pips. Again, this is a similar position here. We would place a stop loss at around 35 pips, as there's no recent high, nor is there a close daily pivot points. So we're going to target the recent lows for around 50 pips, and this would also be a winning trade. So we're just going to place our 1 here, and we'll place a 50 here. Moving on to the next trade. This one comes in the middle of the night, so it's got quite low volatility. As you can see here, we've got really small candles. But we'd enter this after it passes back below 80, so we're going to enter this position somewhere around here. We'd then target the support level using the daily pivot points, and we could place our stop loss just above the highs here for around 26 pip stop loss. So we'd get out of this trade with around 32 pips profit. We just want to place a 1 here and a 32 there. So we have 2 signals here. We'd be targeting lows down here for around 70 pips, and we'd place this just above a recent high for around 20-25 pips. Would be taken out after some consolidation here, and we just move into an uptrend, and it's the same for this position here. So we're just going to write down 2 losses at 25 pips. 25 pips, sorry. So we just place 2 zeros and then 25 in the stop loss. So as you can see by this red line, that means on the 4-hour chart we've just moved into an uptrend. So we've got our buy positions here. After waiting for the stochastic oscillator to pass back above 20 now, we're going to place the stop loss below the daily pivot point for around 20 pip stop loss, and we're going to target the recent highs for around 35 pips. This is a winning position, so we just want a 1 and then we want a 35. And we're going to continue doing this until we reach December, the current day, and we'll see how that goes. So I've just finished backtesting the strategy over the last month, and if we look at the spreadsheet we can see that we've had 21 trades, of which 76% of them were winning trades. We then have our average winning trade of 41 pips, and we have an average losing trade of 26 pips. Down here we just have our risk to reward ratio, which is just our average winning trade divided by our average losing trade. We have our total pips for the month, 526 pips. And then we just have a small comment section here where we can leave a reason why we lost the trade, and this will help us improve the strategy over time. I'll leave a link in the description below where you can download this spreadsheet or this template so you can start backtesting exactly like I have in this video. I'd recommend doing a backtest on all the pairs that you trade at the end of the month, and this will help you just improve your strategy over time and learn what you're doing wrong and what you can improve. If you want to see the exact strategy that I was using in this video, then I'll leave a link where you can download this free ebook. This is just going to tell you exactly how to use the strategy and what you'll be looking for in the markets. So thank you for watching the video, and I'll see you next time.